Hey guys, welcome back to the channel. This is Future Trading with Mike, and I'm not going to say today's August 11th because it's not. Today is still August the 10th, but you're actually watching this now. It's actually August 11th your time. I went ahead and recorded this video on August the 10th, which is today, so you guys will have some video content to watch what you're watching right now for August the 11th. Before I get started, I want to give my special shout outs to those individuals who just recently joined and became members here on the channel. That means you become a supporter here and able to receive the rewards and perks for doing so. And without further ado, going to the first individual who has, this is a group of individuals I just in yesterday's video named the first few that signed up, but here we got a couple more that actually joined. Sergio Cordoba, Ian Vickers, is it Dario or Vidi, and Amar Singh. I hope I'm saying that right, guys. So those are the individuals who just recently, the few individuals who just recently signed up for the membership program. Thank you for doing so. Thank you for being a supporter here on the channel. And let's go ahead and get into the video. And the topic at hand is going to be surrounding market structure. I'm going to show you some examples of kind of what market structure looks like, how to kind of follow it, in the sense of reading it when you look at the market each and every day to kind of give you, help you kind of form some type of bias or direction of what the market, or which way to trade in the market. At least have some type of idea of how to trade each and every day. Because like me, I like to trade off the higher time frame, not off the higher time frame, but in kind of in confluence with the higher time frames. So whatever the higher time frame is doing, I typically like to trade or place my trades or make my trades surrounding the higher time frame or in the same direction. Okay, but before I get started, you guys already know each and every day I like to thank you guys, everyone who's currently subscribed to the channel, and maybe you're a newcomer watching the video right now. Thank you for watching. If you're a newcomer, however you found the channel, and hopefully we can gain you as a subscriber to the channel. On this channel, guys, I'm a price action trader. I trade the ES futures pretty much each and every day, and as well as discuss certain topics surrounding the future markets or trading in general and post them to the channel here. So if you're looking for a channel to where you can kind of follow and watch someone that actually trades pretty much pure price action, in a sense, I trade but use a strategy. The strategy I use is supply and demand. So I like to trade supply and demand levels, and I have a simple strategy of how I do that, trading each and every day. So outside of that, we also have a Discord community which is filled with great traders. Okay, and if you're a futures trader and you're interested and you're watching this video today, you can join the Discord for free. Just simply find the link down in the description portion of the video below. Invite yourself in. We have a good community of fellow like-minded traders, future traders, where we pretty much each and every day during the session we talk about our thoughts and ideas about certain levels that we're looking to trade from, kind of a question and answer type form. It's just packed with good information from various traders that trade the future market. So, and it's a good wholesome group, a team of people that trade the future markets each and every day. So if you're interested in joining the Discord, find the link down in the description portion of the video below. Outside of that, let's see. Oh, if you're interested in joining and becoming one of the members to support the channel, there's two tiers. There is the you have the elite channel membership, and then you have the loyal channel supporter side. So there's two tiers there. Either one, the price is very minimal as far as joining and signing up. There are perks that you receive if you become a exclusive member to the channel. And basically what it is that you just get, you receive perks. But if you become an elite channel member, what you get is more so of an inside view, a breakdown pretty much. When I post my live recorded sessions, whatever the case is, I actually go back and give a detailed breakdown of my trades, talk more in detail of my thought process behind each trade and why I took those trades. So maybe something that you're interested in joining. We have a few. I'm gonna say more than just a few. We have quite a few people who have already signed up for it because they found value in wanting to understand and understand the way I trade, in a sense, whatever the case is. So I don't proclaim to be an educator or instructor or trainer, whatever the case is. It's just a way for me to be able to expose how I trade and maybe will inspire someone else, in a sense. So it's just on those, if you join that elite channel membership, then you will get exclusive turnkey access to the breakdown trade details of my trades. Okay. Outside of that, let's go ahead and jump into today's video surrounding market structure. Okay. I'm going to kind of paint a picture of what market structure actually looks like, because I've said this in so many videos in the past that market structure is like kind of like reading a book in a sense. You have to understand. It's like painting the foundation or a picture in a sense. So, and you got to be able to look at that picture and see kind of what's going on. It's kind of like how you go to an art museum, we say, or you have pictures or of things around your house, whatever the case is, and you can look at them and glance and say, oh, I see what's going on there. Maybe abstract, whatever the case is. So, to me, market structure is no more than price building the foundation or laying the foundation for traders to be able to go back to, or even during the current session to kind of see, give you an inside scope. The market's showing you what it's trying to do in a sense. It's just being able to be smart and trade like think like the market makers or the big institutions and trade along with them. Don't want to trade against them because you will get stopped out. Okay, so let's go ahead and what I'm going to do is kind of paint a picture here. We'll just use a 12 range chart here as a template in a sense. Let me see if I can pull this down, and I'm going to use some arrows to kind of show you some examples of market structure making moves to the upside and then pivoting, and which could be more so like a reversal and moving to the downside, whatever the case is. But so let's go ahead and get started, and then we'll look at like the actual price action, and we'll look at the charts and kind of take a look at market structure in a sense. So when we look at market structure and talk about market structure, all it is, like I said, is the foundation. It is price leaving something behind, a footprint behind to let you know what it's done and possibly what it's trying to do. So the market, say for instance, you got a structure that looks like this. And the market moves in two directions, and only two. It doesn't go this way, this way. It goes either up or down, right? And in those moves, what does it do? It makes moves, pullbacks, moves, pullbacks. So I'll call it ebbs and flows, and that's where price is just making moves to the upside, making higher highs and higher lows, or lower lows and lower lows, lower highs, lower lows, lower highs, those type of moves. So an example of price with market structure moving to the upside is like this right here. Price moves up, it has it pulls back, okay? Resistance right here, breaks through it, okay? All right, it may pull back to this level or to this area right here, and some people will trade what's called a breaking structure, or pretty much a break and retest back to this area of resistance right here. But let's continue on with market structure, okay? Where's my arrow at? Okay, and then that's all it is price doing this right here, moving to the upside. I'm trying to paint it or draw it as clear as possible, okay? So this is what price is like making stair stepping. Imagine having stair steps, okay? 1 swing, 2 swing, 3 swing, 4 swing, 5 swing, and then boom, it makes a higher high. All right, and then price may be moving to the upside, and then eventually it starts to do something like this. Moves down, hasn't broke through support yet, pulls back, okay, forming a swing to the downside, breaks down, breaks through support, okay? Now, depending on what time frame chart you're looking at, whatever the case is, this is a breaking structure now. So, from a short-term basis, you could be looking for something like price pulling back, look for an opportunity to go short, back, following the market direction, whatever the case is, right? All right, so let me delete that though, because we're going to continue with the stair step to the downside, okay? All right, so prices broke support here, then it pulls back, moves lower, breaking more structure, pulls back, moves lower, breaking more structure. I know it's not perfect, but just kind of give you an idea. Pulls back, breaking more structure, okay? And then we get back down here pretty much to the low, which, in any of these areas to the upside could possibly be an area where there's actually small areas of demand, because prices, these are areas where there's aggressive buying moving to the upside. So all this is price painting the picture, stair stepping its way up, pivoting, making structure back down to the downside, right? Okay? So we get back down here, and price can only do two things. So when we see this, price moving up, pulling back, so basically what it's done is made a big move, pull back, okay? See that? Forming some type of swing, a bigger swing, right? All right, so what's it going to do now? Is it going to continue pushing straight down, breaking here, okay? So basically just moving down and making a new low, or is it going to kind of, just push up, pull back, just to break higher, break through resistance right here? Then this would be a big swing to the upside. So you have to be able to see the small moves and the big moves, okay? Because there's swings. So what I call supporting swings, swings within swings, or swings within bigger swings, okay? So, so if we take this away, just an example, okay, where price is pushed up, well, just say it's pushed up, pull back, done this move right here, pull back pretty much. So it's pretty much made a low, a lower high. This is kind of like a wedge, what I call it, where price is pushed up, pull back, and then it's kind of pulled back. All right, at this point here, we're in a wedge, so price can either shoot lower, breaking through this area of support down here at the bottom, or breaking through resistance, okay? So you got to be able to read and understand what price is doing at any given time following market structure, okay? And the market makers, what we call the market makers, it is their goal to shift the market around, making structure to kind of stop traders out. So you got to, if you're looking at prior structure, whatever the case is, and that's why I say always look at a higher time frame, because if you follow the structure of a higher time frame, then you can say, okay, price has not, like right here, price, if this was a big move to the upside, let's envision something like this right here. Let me move this over here. Let's see. Let's say price is moving to the downside, okay, and then doing this. All right, so it's swinging to the downside, but it turns around, okay, does this, breaking structure, meaning breaking structure right here. Now we got a move to the upside, okay. It's doing this right here, and then it pulls back like this just to break higher. So if this is your higher time frame, and this is structure on a higher time frame, how would you trade that accordingly once price pulled back, say, to this area right here, which we call this area demand? Okay, so in this instance right here, this is what I would probably mark off an area demand right here, right? Pulls back right here. I scale down to my lower time frame to see if we get the full-on rejection with the structure breaks back to the upside. Pull back, go long, taking it back to the highs and possibly higher, right? So you have to be able to see and understand, looking at the higher time frame, are you still in a structured move to the upside or to the downside? And if you're in a structured move to the upside, just wait for price to come back to an area demand on the higher time frame, scale down to your lower time frame, your next, say your anchor chart, and wait for the rejection. Wait for the rejection. The rejection means that price is breaking structure back into the upside. Then on the pull, we're looking for a move on a pullback, right, to actually go long. So, so here is, I just painted a picture or image of what market structure could look like. Now, market structure could look different every single day because the market can do some crazy stuff. But this is a move to the upside, okay? And as long as we're moving to the upside, we can just take these pullbacks, okay? Now, I don't typically like to take breaks and retest right to resistance. Well, which was resistance back to support. Break, retest, was resistance, now support. Break, pulls back, was resistance, now support. I don't like to take those moves. I like to take the moves when price is breaking higher and it's broke through structure to the left-hand side of the chart, and then it pulls back to some area of demand on the pullbacks, right? But when I see the change in tide and price starts breaking structure, making structure and breaking structure, meaning it's push lower, pull back, break lower, taking out support as it's moving to the downside and taking out structure over here. Basically, I want to take trades back to some areas of supply. Push down, pull back, supply. Push down, pull back to up here to an area of supply. So I'm looking for things like that as I'm following price action, whatever the case is. So now let's switch over and kind of look through or run through, looking at the actual market from a higher time frame to kind of see, okay, what's it doing, forming a bias? Is it making higher highs and higher lows, pulling back and it's still making higher highs and higher lows? Those type things where we can scale down and look at a lower time frame and trade in the direction of the higher time frame. Okay. Now, looking at market structure on the higher time frame, I always start off, like I say, to look at my higher time frame, which in my case is my 60 range chart. What do I see? I see price making high, higher lows, high, high lows, high, higher low, higher high, higher low, higher high, higher low. We get into today, and then boom, higher highs, higher lows, higher highs, higher lows. Okay, making a high right here, right? So this is just telling me, man, market is bullish to the upside, okay? And all I'm waiting for is an opportunity for price to say pull back to an area of demand for me to take a continuation move to the upside, but scaling back once price taps into an area of demand to my lower time frame chart to see if we get a rejection, right? So, but just simply looking at market structure, I see price making higher highs and higher lows. So my mind automatically shifts and I have a bias formed to take trades to the upside, right? Okay, so with that said, all I'm waiting for is for price to do what? It broke a high here, it made a high, broke that high to the upside, pulls back. So when price was moving to the upside right here, all these green candles, bullish, 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 you know, strong candle to the upside. This swing right here, small little swing, pushed up, pulled back, red candle, broke higher. There's a little swing here within this swing right here, okay? So that is what's called a supporting swing. The moment price pulls back to this little area right here, okay, little supporting swing, the bottom end of it, that is demand. There could be demand zones within a supporting swing of a bigger swing, okay? Pulls back to this area of demand right here, boom, I scale down, that's at 10:35 today. I scale down to my lower time frame chart, all right? And even a lower time frame, what do you see happening? Price making higher highs and higher lows, higher highs and higher lows. So both charts are telling me, even with the direction from the higher time frame, I need to be taking trades long on opportunities when the price pulls back. So 10:35 is around. Let's take a look again because it may not actually be 10:35 because it's a higher time frame. Price pulls back. Yeah, it's really going to be more so around this area right here. I think on the 12 range chart. Let me measure the low right here. We're talking about 78 and a quarter. Okay, whoops. Oops. Okay, so it's this area right here. Okay, all right. So price gets back there. Okay, it pulls back. Okay, look at it again on the 12, on the 60 range. Pulls back right here. All right, it's pulling back, tapping into that area of demand. Now, if I look at the 12 range, even on 12, like I said, the direction our bias should be to the upside. It pulls back. I got interest in going long here. But price is going to have to show me that it wants to break some kind of structure to the upside for me to take a long, right? Okay. So when it does finally break structure, I mean, it's got to take out, it's got to be breaking structure, meaning making higher highs, higher lows, higher highs, higher lows, but taking out an area of resistance as it's moving to the upside, which it finally does when it makes this move here to the upside. It takes this area here out. But the thing about it is, we done made all this run to the upside, and I do not want to trade in the middle of a leg right here. So possibly more than anything, when price pulls back to this area right here, which is going to be more so an area of demand for me if pricing gets there. And secondly, it's also the area where the movement back to the upside originated. Now price may not get there immediately, but hey, it's got area to fill on the way back down. So when it gets back here, it can check this area, and I could possibly look for some means of rejection back at that area, being that when price rejected here in the 12 range and broke higher, breaking through resistance, once it gets back down here, meaning that once it gets back, well, down here to this area right here, I could be looking for some means of rejection. Okay, all right. So if it does get back there, let's see. I'll just simply wait and see if I get that rejection. Now, price did push up here, breaking resistance right here, breaking structure, and it pulls back. It pulls back to this area right here. Now, this is probably the 50% close to an area of this move to the upside. And when it gets back here to this little, if you want to call this little demand zone right here, okay, where there's additional buying coming out of it, right here, you just switch over to your lower time frame chart for me from my 12 range, which is my 4 range, and I'll see if there's rejection, okay? Because I'm in a bias mode of going long. So any pullback even to an area of demand on the 12 range, already knowing the 60 range telling me I need to go long. The 12 range is telling me I need to go long. So if I can even get a pullback to an area of demand on the 12, I scale down to my lower time frame, my 4 range, to see if I can get some rejection. Okay? All right? Now, the thing about right here, price pulls back right here. I look at my 4 range. I can guarantee that it's showing me rejection that I need to go where I can take a trade. All right? Taking it back up to the tops right here, right? Or at least get in, and my first stop is probably going to be to this area here and letting it run back up to the upside to the high right here. Okay? But now, we pushed up. Okay? We're pulling back to the same area now. All right? Now, would I go long? It's an iffy situation, because one thing for sure we did not do was take out this area of resistance right here. Okay? Right here at 42.09. We didn't take it out. 42.09 3/4. We didn't take it out. So, I have to be very, very careful if I'm going to interest in taking a loan when price gets back down to this area. But that's what I wanted to do, was show you, you know, the picture representation and how to draw it even in your mind, or even draw it down on a piece of paper yourself and start just kind of jotting out, you know, areas of structure. Look at the market, paint some or draw out some areas of structure. Like, look at the market's doing, and then kind of follow it and read market structure, and maybe even read some books so you can be able to follow market structure, because the market's always is doing different things. I call it, it's always evolving. All right. So you got to be able to understand market structure. And the best thing about it is, once you know which direction the market's actually moving, you know, you trade along with the market. It's like you want the market to be your buddy, you want it to be your friend, and you want to trade with it when it pulls back to good solid areas. And that's all I have for you guys today. And I hope you guys appreciate the content in today's video surrounding market structure. And like I said, I trade supply and demand, and I wait for those moves or those pullbacks back to areas of or support or demand levels, whatever the case is. But I'm always the influence, trying to trade with the higher time frame. Now, sometimes I'll scalp sometimes, because even though the higher time frame is, I know I should be taking trades long. Sometimes I'll get into a short, but it's a very short, very short trade, very quick trade, just based on if the higher time frame is showing me that the direction is to the upside, but then the 12 range chart, say for instance, starts to break structure to the downside, meaning it's breaking structure as it's making lower lows and lower highs. I'll look for a pullback real quick and maybe go short, okay? But I know that I should be trading in the direction of the higher time frame, and those are the bigger moves, okay? So that's all I have for you guys today. I'll see you guys on Monday of next week, and have a great weekend. And also, please, if you're trading, please be safe and have a successful. I hope you guys making money in the market, pretty much like that. I'll leave it like that, okay? Take care.